All right, good morning, everybody. Today is August 5th, 2026. I know I haven't done live sessions in a couple of months, and that's pretty much because I was doing some testing for some, and I really changed the way I was trading. And plus, I really couldn't make the morning live sessions. Um, so I think even for today, I mean, going forward, we probably will be doing the evening or we'll be doing afternoon live sessions and not really morning live sessions. So, all right, so we have about 30 seconds till market open. I did change the way I've been trading, so we'll see some of the new ways I've been going about trading. So let's see. And pretty much I've switched back to one of the strategies I've been focusing on is supply and demand, and the other one is order blocks. And when I first started trading a couple of years ago, those were some of the strategies that we started on. So for example, like this gold trade right here that I took at 8:30 was based off of supply. Um, and I know there's this automated strategy, market open, that we were taking before, but nowadays I just like kind of just follow it around. But right now we'll see. So this gold supply entry did hit. And if we get an example or examples of them today, we'll just go over them. So I'll show you guys. So the chart to my extreme left, that's the one that I would be taking based off of order blocks. And ideally, we're just looking for how price is reacting against any of these order blocks. But you can see right now for US30, we've been pushing pretty heavily over the last couple of days. So I really haven't even gotten any trades for order blocks per se, but for supply and demand, we might get something. So for the supply and demand, what I'm waiting on or what I'm looking at is, for example, I just need price to get. So remember how we used to say like inner supply, inner demand areas? It's like in a red zone. There are these zones that are in here that are redder or darker than the others, or that have a darker shade of red than the others. So if price gets there, what I'm waiting on is a rejection of some sort. So I need to see a candle. So this is on the 5-minute time frame, but I would want to see a candle reject from those zones and close as a bearish candle, or get like a nice bearish candle close. And then what I would do, I would set a pending order above or below. So if it's supply, you'd set a pending order below the candle that validated it. If it's demand, you'd set a pending order above the high of the candle that validated. And for US30 today, I don't know, unless price comes back down. So this is US30 in the middle. This is US30 15-minute time frame. I don't think we'll get anything on the 15-minute for the order blocks. So the order blocks ones I just traded on the 15-minute time frame. And this supply and demand, I just traded on the 5-minute time frame. And like, so here's like another example of another buy on gold that happened. Let's see if that inner demand or that demand zone. Okay, so that held after actually. That came up after the candle close. So let's just see if we can get an actual one here. So for example, you see here, if we get a tap into, let's see, just change the color here. If we get a tap in here, in here, in here, and closure with a nice bearish candle, you'd just set a pending order for a sell. So this one didn't tap yet. I don't know if I went live on YouTube. Let's see. I think I did. All right, so this market open just hit full TP for 1:2. So here on gold, we do have this supply zone here. So we want to watch what price does once it does give us a retest at that zone right there. So for this supply and demand, right, if you get tapped into a supply or demand zone, you just want a nice weak rejection, and then you set a pending order above or below the high, or above the high or below the low of a candle, depending on what direction you're going for. And then you would just, and I can take this off right now. But yeah, so this, when price gets back to this zone, if it gives like a nice bullish candle with a nice wick, I would be looking to take a buy or set a pending order for a buy. For US30, I don't because we are pretty much high all the way up there. And I don't even know if this is I don't know if we've made an all-time high again. Yeah, so US30 is at the all-time high. So of course we're not going to get any entries for US30 for supply for right now, unless we get a correction and then a retest. But for US30, we are pretty much all the way up there. So this would be, here's another example right here. So we have this inner demand zone, I'm sorry, inner supply zone right there that got tapped in by this candle. So if we take off this indicator right here, so one instance would be to set a pending order here, but the wick, and what you're looking for, you want the wick to be larger than the body. So in this instance, this body was what? This body was like $1 or 10 pips or whatnot on gold. The wick was like twice that. And then you'll just set a pending order below here. For me, I would rather wait for another candle because again, we still have this wick from the downside of that candle that validated it. So I would rather wait for a smaller candle because for this, in this instance, for you to, if you set a pending order here, and for me, I go for a 1:3, and then you can do break even at 1:2, but you would need a $12 stop loss on gold, which is, what was that, like 120 pips? But I just used like the dollar amount. And you would need like a $36 target for take profit. So you can see it's a pretty wide trade. So what I would rather happen is to get a candle, a smaller candle here, go for a smaller candle that gives me like a $5 stop loss, and then I go for like a 1:3, like a $15 take profit. So I would rather wait for a smaller candle. Yeah, I would rather wait for a smaller candle. So this one looks small, and let's see, just want to make sure. Yep, so it literally rejected off of the low of that zone. Now here, the key thing is the wick has to be larger than the body. And we have about 2 minutes till that happens. So just test, at this point, you should start having an idea of what your stop loss and take profit will be. So this one will be a $7 stop loss, which is again a little wide for my liking, but if you're going for 1:3, 21, let's see what's down here. So you also want to look at the direction you're going to. So if you're going this direction, we already know we have an inner demand area here. So if price rejected from here after it hit take profit for this trade that took at 8:30. So you would need a lot of momentum to break this inner demand area that's right here as well. So you need a lot of like momentum. So best case scenario, you probably want to have your take profit just around that zone. So you can see your take profit here would have to be about $12, which is to mean if you're going for a 1:3, you need like $4 stop loss. And that really doesn't mesh because you want to make sure that your stop loss is above the high of the candle. So if you go anything like a $4 stop loss, your high, I'm sorry, the top of your stop loss would still be lower than the high of the candle. So the goal is to always have your stop loss either above the high of a candle or below the low of a candle. So in this particular instance here, if this candle closes the way it's closing right now, or the way it looks like it's closing, this is a valid entry. But your take profit would literally be all the way below this inner demand right there. So what I'll start doing is to start preparing my trading, my trade platform. And remember, it's a pending order, so it's not a market. Okay, so if it breaks the low of this candle, I'll take the trade. Let's see. Okay, so I'm taking the sell here. So stop loss, a $7 stop loss. Take profit is like a $21, which is huge on gold. Personally, for me, it's either take profit or stop loss. Given that this is a 1:3 risk to reward, you can set break even once you reach 1:2, but just know here we have an inner demand area. So when price gets here, we expect some sort of rejection or some sort of what is it called? Yeah, some sort of rejection. So price may have a hard time breaking this inner demand area because again, within a supply zone, we are trading the supply zone that's inside the supply zone. Within a demand zone, we are trading the demand zone that's within the the larger demand zone. So we kind of have a clear pathway between our entry here, and that's like a $12 entry, $12 direction here. So for me, it's either TP or stop. So either 1:3 or either I get the 3R or -1R. For me, for other people who take parts along the way, I do recommend maybe setting break even once you get to a 1:2. So 1:2 would be like a 14 right here, would be the low of our inner demand area right there. And then I'll just take this off. I really don't like too much colors on my screen. But you can see the reason I took this trade, we got a rejection off of the low of the inner supply zone. And then we got a nice wick here. And then we got a nice bearish close. And then set pending order below the low of this candle. And then now price got tagged in. And the reason you want to use pending order, so this is one of the trades that you could have entered on candle close because we had like a nice bearish candle. But the reason you want to use pending orders, and let me give you guys some examples of some trades I've taken here. So these are some of the trades I've taken in the past couple of days or in the past day or so. Let's see if there's another one. Let's start with this one. So if I do bar replay and kind of get the essence of it, and then we turn back on our supply and demand setup. Okay, perfect. So you can see, and again, it's a little bit crowded, but you can see here, we have this inner demand area. So when I talk of inner demand, I'm talking of in a green zone, there are zones that are greener than others, right? So I'll just highlight them right there, and then I'll take off this indicator just to have a clear view. So what are we looking for in this area? In this area right here, we want a nice bullish candle that shows a rejection in this area. Can be a bullish candle, can be a doji, but some sort of candle where we have a weak rejection from any of these zones, okay? So if we expand this and we go next right there, so you can see here, price went all the way down here. Okay, perfect. So within these zones, we just want a nice a candle that shows us rejection. Okay, then we keep going. And I think at this point, actually, because of this bearish candle, I think that this initial zones had been taken out. So let's see. Okay, so this first zone was taken out because if you have a bearish candle like this, it's going to, this zone's update in real time. So they're not repainting or anything, they update in real time. So if you have a strong, in this instance, a strong bearish candle, you can see here initially we did have this inner demand zone, but because of this strong bearish candle, because of that strong bearish candle, you can see the inner demand zone is no longer there. So what other zone do we have? We have this inner demand zone that's right here. This big zone that's right all the way, I think, somewhere there, right? So if we take this out, we can see our zones here. So again, what are we looking for? We are looking for rejection from our inner demand or inner supply zone. So in this case, you see this candle right here. What did this candle do? It rejected from this inner demand zone. And then we had a nice bullish. So this is a nice bullish candle. We have a weak rejection. We have a nice body close right here. So in this instance, what I did, I went ahead and set my pending order above the high of this candle. And the reason you want to set a pending order is because sometimes if price was supposed to continue bearish from here, it's not going to come back up. It's going to keep pushing back down, and then that saves you like a loss before tagging you in. So that's the difference between a pending order and executing a market order on the closure of the candle right there. So if we see what happened in this instance, and our trade is still going, it's still pushing towards our direction. So in this instance, you see what happened? You get tagged in, price pushed up, and I got my 1:3 right there. Let's go to the other example here. And what you're betting on, this inner supply and inner demand zones, they also act as possible reversal zones. So best case scenario, you're typically catching the low or the high. So you can see in this instance right here, I caught a buy around the low of this pattern right here, right? So if we keep going, let's see if we can identify why I took this other trade. So I go ahead and turn on my zones here. So here I had a lot of zones, right? So I have this little zone that's right here. That little zone that's right there. I have a zone there. I have quite a bit of zones here. I'll just group them. So something like that. All right, I go ahead and take this off. Again, looking for a nice weak rejection. Something to show me that the buyers are coming in. Okay, so this keeps going. All right, so in this instance, let's see if our inner demand zones are still there, the ones we drew. So these ones have been taken out. This one has been taken out as well. The only one that's remaining is this one. All right, perfect. So for this particular one, again, looking for the weak rejection. And this is a good example of not every time, if you're buying, not every time will you get a bullish entry. If you're selling, if you're buying, not every not every validating candle will be a bullish candle. If you're selling, not every validating candle would be a bearish candle. So that's why we go back to measuring the wick size and seeing some rejection or trying to find rejection. So this one is about $2 for the body, $2 measurement for the body, 2.1 for the wick. So if you're looking for the size of the wick should be at least 50% of the body or 50% of the whole candle, including the body. So in this instance, what I did, saw this rejection right here. The wick was about 51%, measuring from here to here, so 51% between the body and the wick. So I went ahead, set my pending order there. And again, price pushed up right there. So they do have a good win rate, but of course there are times that these entries will lose. So if we go back yesterday, so this trade for today has gone back around drawdown. But like yesterday, there's this trade I took and it lost, but it was a valid trade. Let's see. Let's start with this one right here. So let's start with this one that lost a few days ago. All right, so this particular one right here, we have this wick from the top. The wick is larger than the body. In some of these instances, I don't like seeing a big wick from the bottom, but at that point, it's relative, depending on if you want to take it or not. But in this instance, yes, we had a wick rejection from the inner supply zone that's right here. So we have that rejection right there. And if I take this out just for visual, this wick from the bottom is not the best, but it was still a valid candle. So I'd consider it like a B setup or C setup. Set my pending order below the low of this candle right here, and then got tagged in. But unfortunately, price went back up, hit stop loss, and then pushed back down to like a 1:2.5 and reversed back. But as it was reversing, there was a bullish entry here, or there was a buy entry here. So if we turn on the zones here, yes, that is pumping. If we turn on the zones here, you'll see this inner demand area. So if I go ahead and mark it up, we have this zone, and then we have this zone above it right there. Turn this off. Okay, so same thing. All we're looking for is a rejection within this zone where the wick is at least 50% between the body and the wick. So in this instance, the length of this wick is what, like $1.5. The body length is what, like 0.5. So the wick is like 3 times the amount of the body. So I went ahead, set my pending order there, got tagged in, and price pushed up. So even though I lost the previous trade, I was minus 1R. This new trade got me 3R, so I was up 2R. Yesterday, I did take a loss as well in the afternoon. And so right now, today's trade for gold unfortunately hit stop loss. So came down for, what's that? Like a 1:1 risk to reward, and then reversed back and pushed up. But I will still look at this zones because I know up here still we have some supply zones. So we might even get a tighter stop loss for like $2 or $3. But that trade we just took right there, unfortunately, went to 1:1, but hit stop loss. So we have 2 minutes before this candle closes. For yesterday, this trade hit stop loss, but I had 2 back-to-back wins after that. So this was like at 3. What time was this? This was at this is what, 2:50 p.m. EST. So yesterday, what happened here? If we turn on our zones, okay, so we had this inner demand zone right here. I go ahead and turn it off. Had this candle, wick rejection, closed as a bullish candle. I'm looking for buys. I set my pending order there for a buy. got tagged in, price went up, was playing around, hit stop loss here. Around market closure, same thing happened. We came back down there and we had this inner demand zone right there. And I think it was actually smaller. If I go back, we have about 20 seconds. Yeah. So it was that zone right there. If I take this off, all and the afternoon session gives you such a tight stop loss. So in this instance yesterday, I had a $2 stop loss. So $2 stop loss, $6 take profit. Set my pending order above the high of that candle. On market open, price hit TP. And guess what? Also, we had a sell entry, but let me see what's happening here to see if we have any other trade before I go back to reviewing that. Okay, so no entry here. We did close inside the inner supply. However, did close within the inner supply. However, there's no wick. We do have a small wick, but this wick of this candle, of this 5-minute candle that just closed, the wick is small compared to the body. So this is more of a bullish candle. So there's no need for me to look at taking sells. So in this instance, I just continue waiting until I get a trade. Best case scenario here, we can get away with getting a candle that's like $2. That's going to allow us to do a $2 stop loss and go for like $2 stop loss, $6 take profit. But you can see this trade right here went ahead and hit take profit for a buy. And then same thing happened, the reversal for a sell. Go back there. All right, so what do we see here? Here, we had a inner supply zone right here. So, right, and if you see the inner supply zone here, it's this zone right here, right? Within this red zone, there's this zone inside here in between. So where this two supplies overlap, so that zone right there. And then if I turn it off, you can see we got a nice wick rejection. The wick, so you want to see the wick rejection either from your zone, within the zone. So in this instance, because it was Asia session, got a stop loss that was what, $4 and went for like a $12 take profit for 1:3. So here what I ended up doing, set my stop loss pending order. I'm sorry, set a pending order below the low of this candle and got tapped in and price went for a 1:3. So as much as, yes, the first trade lost, the next two trades won. So had like -1R, got back 3R, so up 2R plus 3R, that's 5R. And for this particular trades, I go for, I risk 0.5% per trade, because with these trades you'll get like, depending on the session. So if you're just trading New York session like I do between 9:30 a.m. to 11 a.m. Or New York morning session, you get like between 0 to 4 trades a day. If you trade the afternoon session, of course, you'll get more trades. But personally, I do like the afternoon session because it gives me like a tighter stop loss. Because sometimes you'll get like the one I showed you guys for this one, $2 stop loss. And I could have even gotten, it's only because my stop loss was way below the low. But ideally you want your stop loss right below the low of the candle. But if I wanted my stop loss literally at the low of the candle, I could have gotten away with a $1.5 stop loss, right? So you can get away with, especially during the afternoon New York session, you can get away with such a tiny stop loss because the candles don't move with too much volume compared to the New York morning session. So today, minus 1R. So for these trades, I risk 0.5% per trade. So today, so far, we can do here minus 0.5%. And yeah, we haven't traded for, I haven't done a live session for 3 months, but the last time I did a live session was active live session, I think was in March. March was break-even month for the live trades. February was up 3R. I'm sorry, 3%. I didn't trade in January. So I think this year I've only actively traded. I've actively done live sessions in February and in March. Since between in April all the way to August. I still trade my own accounts. I still trade every day. It's just because I've found it harder to do live streams in the morning. So even going forward, I think our live streams will be in the afternoon. And that's even better because you even get like, those tight stop losses. So if price continues being bullish here for gold, a few things may happen. So let's see here. If I delete, okay. So if price keeps being bullish, it may take out all these inner supply zones, right? If price keeps being bullish, all these red zones might get taken out or wiped out. And again, this happens in real time. So you'll probably see, like, for example, here we know we have an inner supply zone. So if we keep getting bullish candle, if we keep getting bullish candle, you see how it just disappeared. So that just means the inner supply zone that we had traded just got wiped out, because now we are becoming bullish on gold. So again, here there's still possibilities for sales, because again, where are we going? We are headed into, and you can see how it's updating in real time. We can still get selling opportunities here, because again, don't forget all this. So for example, up here, let's go ahead and highlight them. This is an inner supply zone right there. We have another one. We have a couple of them right here. We have that. I'll just group this two. I really don't want to have too many on my screen. We have this one. We have where price currently is. And we have this one right here. So if I take this off, if we get a rejection from any of these zones with a nice weak rejection or nice bearish candle, guess what? I'll just take that trade, or I'll set my pending order. So far nothing for, so US30 is at the all-time high. So US30 is really, we don't have any zones here, even order blocks. So even for me, the order block entries for this whole week, I really haven't gotten any because US30 has just been creating all-time highs. And even for the inner supply, inner demand areas for US30, we can't get anything here. The only entry we can get for US30 is if we get a correction back down, and then we form a supply zone up here, and then maybe get a entry for a sell. But right now, there's really nothing. The alternative is US30 to come down all the way here to this inner demand area, and then give us something for a buy. But that is like 300 points away. So I'm not even optimistic that US30 will give anything. So let's keep watching gold and see if we get anything in all these zones that we have that are marked up here. So again, the higher it goes, it will start invalidating some of these zones that I've drawn up. So if this candle closes the way it is, like as a bullish candle, you'll probably notice some of these inner supply zones disappearing. And then if it breaks all the way up past 42.36, again, we still have inner supply zones up here, right? So it's just a matter of being patient until you get that nice candle rejection. So of course there wouldn't be any sell if this candle, the way that, so you can see here, for example, this zone has been taken out. This zone as well has been taken out. So we are left with this zone and it's a supply zone and it's below price. So I don't think that will hold for too long. So the ones we are looking at right now, this is our very last within this range right here. I drew that wrong. Within this big supply zone here, this zone that's here at the top, that's our last selling area. If price breaks above that, then we move into a new supply zone where the low of that supply zone is here and the high is here. And then within it here, we do have these zones that are right here. And we can do a live session in the afternoon as well. So the afternoon sessions, I'll be doing them between 1:30 to 3. So we'll do one in the afternoon today, I think. Yeah, we'll see. But yeah, I think we can do a live session today in the afternoon. 12:30. All right. Actually looks like we might get a sell entry here. Yep. So here, so you can start measuring. So this is a minute and a half. This is such a wide stop loss. This is a $10 stop loss. It's not the best. To go for a 1:3, this is a $30 take profit. That is very, very wide. The candles are moving fast, but let's see how it closes. It might become an intraday trade with this one. But if this candle closes the way it wanted to close or the way it was ushering, like having a big wick rejection from the top, it's just it just would be too wide of a stop loss, but nevertheless, it would be a valid trade. All right, let's see. So 16 seconds. So it does look like it will validate. That wick just needs to stay at the very least where it is. 5, 4, 3, 2, 1. And I will set a pending order somewhere here. Now, the reason you're setting pending orders is if gold is supposed to continue being bullish, guess what? It will continue being bullish without tagging you in, right? So you can survive. Like if gold now wants to target, let's say any selling opportunity is supposed to come from this next zone that's up here. Guess what? If gold is supposed to keep being bullish, it will break out of this and invalidate. If at any moment this this inner supply zones get invalidated by gold pushing up, then I go ahead and cancel my pending order, right? And if the selling opportunity is supposed to be or is supposed to happen in this next supply zone, then these zones will be invalidated. My trade won't get tagged in, and then I will go ahead and delete it. So that's the reason you're setting pending orders as opposed to entering on market or on candle close. So let's see how this one will go. But yeah, this one is a bit wide of a stop loss. If if we do trade in the afternoon, you guys will probably notice the candles will be any entries we get, like for example, yesterday, where I was getting like a $2 candle entry, like for this one, and still, right, you're getting your 1:3 even with this setups. So in the New York AM session, your stop losses will range. If you get like I don't even know if you can get a $2 stop loss on during the New York session, but for the New York AM session, your stop loss for some of these trades will be between $5 to $10. All right. So again, the reason for me setting a pending order here is we have these inner supply zones that are right there. And actually, this one has been invalidated because that candle closed as a bullish candle. This one as well. So remember that small zone we had here has been invalidated as well. So we go ahead and delete that zone. So we have two zones that are right there, up here and down here. So what did this candle do? This candle rejected from that top supply zone or inner supply zone. What's the length of the wick? The wick length is about $5. The body length is about $2. So it's like 2.5. So the wick is about 2.5 times the length of the body. So what that candle is telling us is that as much as yes, it's a bullish candle, buyers tried to push price up, but sellers couldn't let them push past the supply zone that we have here. But we still don't want to enter. As much as this is the candle that validated, we don't want to enter on the candle closure. We want to wait because what we are saying is that if gold is supposed to push down from here, we don't want to enter on market closure. I'm sorry, on candle closure here. We want to see if this candle that validated the entry and told us that we have sellers that are pushing price down here. If those sellers are in control, by the time they're pushing price down here, right, the market structure will have reversed for a sell and we'll have gotten like an extra confirmation, extra confluence. So we go ahead and set our pending order below the low of that candle, stop loss above the high of that candle. And what we are saying is that if price keeps pushing up, that's fine. We just get we just save ourselves a losing trade. But if price pushes up like this and closes as a bullish candle, and this inner supply zones are invalidated, similar to what I just showed for the other zones, at that point, we just go ahead and delete this inner supply zones here, and we go ahead and delete our pending order. And guess what? It's still early. We still have like 40 minutes. We still have these zones up here. So let's start mapping them out, these inner supply zones. So we have that one. We have that little one. We have this other little one here. We have this one. That's right here. And we go ahead and turn this off. Okay, so we just closed with a bullish candle, right? All right, so let's see if our zones are still there. So the zone that the pending order was based on has been obliterated. So it's no longer there. So the zone that the candle, our pending order was based on, it's no longer there. So you know what we do? We go ahead and delete our pending order here. So I've gone ahead and deleted my pending order, the one we had here. And even better, because I really didn't want to do a $10 stop loss. So we can still get a trade if price decides to push up here. So that's the beauty with setting a pending order for this particular strategy, because here, if we had entered on candle closure, you can see we would just be literally next to being stopped out. So that's why you want to do a pending order, because remember what I told you guys. If if um if price is supposed to keep pushing up and price is not ready to sell yet in this particular instance, rarely will it come and try and break the low of the candle. Rarely will it come and break that low where you've set your pending order and then push back up. Sometimes, yes, it will happen. And even though it does happen, like in some of the trades that we've seen that I showed you guys from yesterday and the day before that lost, even in some of those instances, what will happen is that you'll get a push up, go get like a 1:1, like today when we got the 1:1, but then price starts reversing back up, right? But rarely will you get that. If price is supposed to continue bullish, you just get tapped in and then you go straight into stop loss. It does happen, but it doesn't happen as frequently. So that's again the idea for setting your pending order there. And again, you're going for a 1:3. So like today, if I get a winning trade, as much as I'm down -1 R, I would be positive 2 R if I get just one winning trade. Initially, I was going for a 1:2, but this week I'm trying to see how it goes for a 1:3, and I compare the results. But one thing that I'm considering is you go for a 1:3. When you're at 1:2, you set break even and you just let it ride. Or you can take partials at 1:2 and then ride the rest to 1:3. But yeah, so this week I'm just testing out with 1:3. I really don't like doing break even. So for me, mostly it's either going to be stop loss or take profit. Oh, wait, we have one for US30. There is a US30 here. Give me a second. There's a US30 buy right here. We are buying at the all-time high. This is a US30 trade here. This is a 60-point stop loss. 6 times 3 is 18. 180 point take profit. This is high. This right here is high. Let's see. It is valid. Why is it valid? You see this inner demand zone here? Only thing is that we are at the all-time high, but let's see. If it comes back down, maybe I'll try to catch something here. Yeah, we are at the all-time high. 60 to 180. Let's just see how it goes. I really don't like it. I'm not gonna take it. Reason I'm not taking it, we are at the all-time high. Like this, the high of this candle is literally the all-time high for US30, 54,775. It is a valid trade. The reason it's a valid trade is if we take this off, if we turn off our zones, you'll see that we had this inner demand zone, right? And then we had a candle rejection from it. And then you set your pending order at the high of that candle. If it wasn't an all-time high entry, I would have taken it, but literally it's the all-time high. So in any case, for US30 here, I would rather take sell entries, but we can watch it and see how it goes. But the only red flag for this trade is that we are at the all-time high for US30. So it's really not the best area to even take a buy because you would be buying at the highs. So we can just observe it and see how it's going to go. If you want to take it, maybe use like a very, very low lot size, and not like the regular risk. Because of course here we do expect some sort of manipulation around the all-time high, but it is a valid inner demand entry. For me, mostly what I'm looking at here is for gold to get to this inner supply zones and maybe give an entry for sales somewhere up there. But yeah, this US31, if we were somewhere even here, I would rather take a buy because here as well we have the inner demand area right here. So if we were here, maybe I would rather take that. But yeah, this one is a little too tricky to take because we are at the all-time highs. But we'll just watch it here on the side and see how it would have gone. So you can see that whole supply zone here has been taken out. And even this one for US30, uh, let's see. I think this one for US30 as well, because of that, yeah, because of that bearish candle that closed below, that one has been taken out. But again, yeah, this is, again, we are the all-time high. So there'll be a lot of back and forth for this trade. It really hasn't broken the low of this hammer candle. Um, but you can see as price has closed down or has closed below that inner supply, I'm sorry, inner demand zone that was here, it got taken out. Now, if price closes above that zone again, it might form another inner demand zone. And then at that point, even give like, if I get like a 20-point stop loss for US30, at that point I'll enter. But this one is 90 points and it's around the all-time high. So that just gives a lot of room for manipulation. But if I get like a 20-point stop loss, hitting a 60-point take profit on US30 doesn't take US30 too much. All right. So also note that there's typically, since we are at the all-time high, so if you get to where price hasn't been in a minute, we'll start creating a creeping supply and demand zone. So that just means it's not established. But what I'm getting at is this particular zone that's right here. So it's not an established one. This one that's right here. So actually, we do have a selling opportunity here. Let me see what I want. We actually do have a selling opportunity here because you have the intersection, you have this. So that one has already been established, and then it intersected with, let me reverse this. So this is actually a sell here for US30. So I'll test out this sell. It's a 90-point stop loss again. This is a little too much, 270. Let's see. Give me a second here. Let me see something. This is a bit too high. We have this in a demand. Mm. Yes. So it's based on this intersection between this creeping supply. Yeah, I'll set a pending order here below the low of the previous candle and see if price comes back there. So it's a 90 point stop loss, 270 point take profit. It's doable on US30, but we have to, this has to be the high of the day. So US30 shouldn't try to do anything or to go higher than this. Because if it goes higher than this, so stop loss would be above the all-time high or the previous highs. And then if price comes back, and so the candle that validated, so actually the entry should be this candle, but I never got in because I just noticed that zone right there. And the reason for that is, again, we have this creeping zone that's right there. We have this zone that has been established as a supply zone. So the creeping zone hasn't been established yet. But the idea is that in future, it will hold as a supply zone. So the reason for this trade would be this intersection between the creeping zone and the zone that has been established. So this right here. So that would be the reason behind this particular trade. So let's see if it comes back down. If it doesn't come back down, well and good. Gold, I don't know. I don't know if we'll get anything for gold. Maybe in the afternoon session, we might get something for gold. But for right now, I'm not sure if we'll get anything for gold. But for US30, let's see if US30 will come back down and tag in this entry. So I already have my pending order below the low of this green candle here. And again, right, where did that green candle validate? The wick was 52 points. The body was 30 points. So the wick was at least 50% of, in this case, the candle, the whole candle. So I'm not yet in. It came close to triggering. So it's the low. What I'm watching is the low of this green candle right here, just that low. If it breaks the low in there, let me just set it even somewhere a bit lower. All right, so we have 14 more minutes before I end the live stream. I don't know if we're gonna get anything for gold, maybe in the afternoon. For US30, I still have this pending order here. And I don't even know if it's going to trigger. All right, so we have 10 minutes. But the last valid time I can enter a trade, so it doesn't look like this will be valid. We do have this other smaller zone, or this zone that has been created actually now. This one that's right there. Okay, so we can get a trade based off of this one at the closure of the 1055 candle. But again, this is the all-time high. So there's a lot of liquidity up here. So actually, in any case, I think US30 is going to keep pushing. For gold, unless we get a push into this inner supply zone right here, and then a closure at 1055, I don't think we're going to get anything for gold. US30, this will be the last particular possibility here. So if this candle closes the way it's going to close, and we have like 4 minutes, this would be an entry for a sell. We have the weak rejection, we have bearish candle, but because we are at the all-time high, so remember, anytime I don't like trading US30 at the all-time high because there's so much manipulation. So you can see here, and this is just an ugly setup, right? We are consolidating in this zone. So price is going to break up or to break out. And my guess is that it might break up to or might break out to the upside because when prices are on the all-time high, like you just have people trying to sell, you just have like a lot of selling orders, and then that builds up liquidity for a further push up. So I'm not too confident for sales. I still do have my pending order down here for this sell. If it triggers, well and good. If it doesn't, so this zone is still holding up here. So this zone is still valid. The zone that was the result of that. My pending order is still here, but based off of what I've seen with all-time high trading, it's typically not the best areas to trade. Gold has started pushing back down further, so I don't think there's anything here we can do for gold. So here, yeah, so the only thing right now is for US30. So my trade has been triggered in somewhere here for the sell. 90-point stop loss, 270-point TP. Again, we are the all-time high, but I'll still take it. But we'll see how that goes. But yeah, 1055 is ideally the last 5-minute candle that I would take any trade based off of. I don't take any candle or any trade that's validated by the 11 a.m. closure because I normally the morning session I trade from 9:30 to 11 a.m. So 10:55 is typically my last time that I get into a trade during the AM session. Yeah, but right now my US30 trade has been triggered. Again, this was based upon this candle right here that tapped into this inner supply zone. And we'll see. It's a 270-point take profit on US30. It is a little high, but for US30, that can push down pretty heavily. So two things you can do. Again, first you can start marking up your 1:1s, 1:2, 1:3. So 1:1 would be there, would be at this point right there. 1:2 would be 90 times 2 is 180. This is idea. 1:2 for this one, I think is a good idea because again, similar to gold, right? Because here for US30, we have this inner demand zone. So for them to break, because what they can do is come, tag this inner demand area, and then push all the way back for buys. So a 1:2 might be a nice area to even exit or just to set break even. But for me, again, this week I'm just testing out with 1:3s. So for me, it's either one is to get a 3R or get a -1R. So I can hold off or I can hold on for the next few minutes and see how this one will go. And I can take this off for now. That's better.
Today, I just wanted to see. You had to check the chat to see if they took that sub today. I didn't trade today, but I just wanted to see. Of course, they did. But you know, solid setup, bro. Solid. Easy money. Easy.
All right. It's 11 a.m. I'm going to keep holding this trade, but just mark your 1:1s, 1:2s, 1:3s. Uh, all-time high. They like to keep manipulating past that all-time high because up here, even like where our stop loss is, like a lot of people that are trying to sell, their stop loss is there. So it is an area of liquidity, so price can easily get attracted back to it. But we'll see how it goes. And then we'll do a afternoon live session, so like 1:30 p.m. to 3 p.m. So in that session, I kind of like it, especially for this particular strategy, because you have some direction of market movement. And by then all this back and forth will have finished. And we may have some additional zones. Gold is back to this zones that we marked up. So hopefully in the afternoon we have some better price action. Yeah, but right now for US30, honestly, it's not the one of the cleanest sell entries I would like, but either way, I'll just hold it and see how it goes. But other than that, I will see you guys in the afternoon. And I think going forward, our live sessions will be in the afternoon because I don't think I'll have a lot of time to be doing morning session live streams. But anyway, I will see you guys in the afternoon. All right, guys, be safe.